Eric Muathe at Muathe.com with the U.S. market analysis for the weekend of August 12th and August 13th, 2017. I'm recording this with about half a session to go before Friday's close. And this is how your markets are trading right now. So let's take a look at those. Or before that, let's take a look at some of the stocks so we can just have them on the video here. These are the prices as of right now. Some of this could be of interest to you. Let's take a look at those charts, see what we got. Now what I'm going to do this weekend, I'm going to break this video into two portions pretty much. What I'm going to call the bearish argument, and the other second portion of this video is going to be called the bullish argument. So let's begin with the bearish argument now that we had a down week. And we begin with the NASDAQ here, and the bearish argument here is that, so we've seen this week we tried to break out above the previous current all-time weekly closing high, and that level was at 6387.75, which goes back to this high right here on a weekly closing basis. As of right now, that breakout has failed. It's not a good sign. Also, check the prior weekly closing high, and we can see that breakout on a weekly standpoint has also failed as of right now. And that price level that we were watching there, and the market had been holding above that for a period of many weeks. The level there was at 6305.80, going back to this weekly closing high. Of course, we broke out, spent some time above that, but this week we've dropped below that. So that's another bearish signal that the market is starting to run out of momentum and breaking some critical levels. So that's a strong bearish argument. Also, keep in mind, we see that the most recent high in terms of weekly performance for the NASDAQ, you see an improvement here in price, but the technicals did not make higher highs. So that's negative divergence, sets the stage for what we are already seeing, which is a weekly pullback. Is there more? We shall see. Now keep in mind also, there's the observation that we are looking at a market that failed to hold above RSI 69.1, which means that that is also another bearish indication of intent to go lower. So that's how the NASDAQ weekly sets up right now in terms of the bearish argument. One level I can give you guys is this recent weekly closing low. We need to watch that for a potential break. In other words, if we break below that price on a weekly basis, now that we've had a failed weekly breakout, if we drop below the recent weekly closing highs, that would be a tell that the market is even deteriorating further. So this is the level to watch. I think that's not right. It's actually got confused there. 140.42. Now this is the weekly closing low going back to, I believe that was June. If we drop below that price, that is going to be suggesting that a lot of the things that we are going to be giving bullish arguments for are going to have been busted. In other words, a break below this price would not be a good sign. So set an alert, because that after a failed weekly breakout, dropping to fresh weekly closing lows is not a good sign, or would not be a good sign. Now if we take a look at the NASDAQ daily, again we see here that this was the previous daily closing high, and as of last week we were holding nicely above that level. So we came and found support on multiple days here. That looked very encouraging, and that level that we were watching there was 6321.76, which goes back to this daily closing high. We broke out above that. We held above that for a couple of weeks, but now we've busted below that. And we knew that if we break below that, that is a sell signal. And once we busted below that price, you can see we've had 2 days down, trying to recover as of Friday. So that's also something to watch. The more we stay below this number, the more this market might test even lower lows, the more it might suggest that this intraday highs might be major highs, maybe long-term highs, short-term highs, maybe generational highs. We shall see. Now, if we take a look at the S&P 500, we can see right now we are doing the best, or the market is doing the best it can to hold above the prior breakout level. So we had broken above the previous weekly closing high, and that level that we've been watching very closely is 2439.07. Going back to this weekly closing high, we've been holding above that and continue to hold above that even as of Friday's action. So either we hold above that line and we continue being healthy, in other words, the breakout continues to be intact and good. Maybe this is just a test of this breakout level. We also know that if we crack below that price, that's going to be telling us that this market is wanting to go lower. Also, we should note here as a side note that as of right now, S&P 500 is back below 69.1 on its weekly. And we know that as long as it was above 69.1, it was very bullish. Now that it's below 69.1, it just opens up the possibility of lower prices. If we take a look at the daily for the S&P 500, we can see that here we pushed to new all-time daily closing highs, but the RSI did not really follow through. That slight negative divergence can be the technical reason why we came off the highs and dropped. In fact, you can see that this move to intraday highs here came with the RSI making even lower highs. So that negative divergence again can be the technical reason why we came off the highs. And those types of negative divergence pretty much is where you get major reversal. So it is consistent with observation historically, where an improvement to intraday highs on declining strength leads to a drop. Now, is this drop going to be bigger? Of course, we have to wait and see whether to see short-term support are going to be busted or not. Now, as we have half a session to go on Friday, this is a level to watch on the 5-minute chart for the S&P 500, and this is a bearish argument. This market's been responding to this line right here. You can see that once we establish this line with the highs here, these 2 points, since then this was reversal territory short term of those intraday highs, and here again intraday highs. And as of right now, mid Friday session, if we are unable to move above that line, that might suggest that we might drop into the close. And at the same time, since it's a 5-minute chart, if we crack above that line, then that's going to suggest a stronger close based on where we are trading right now. Let's take a look at a snapshot of where the market is trading in this current moment, and we can see that Dow is up about 44 points, S&P 500 up about 6 points. So on this 5-minute chart, pretty much short term, we are either going to find support and resistance, either going to find resistance on this line and drift lower, or the market is going to clear that line and close higher. So that's the bearish argument, and I would say that bearish argument is not very strong. Here's the reasons why. Let's begin with the NASDAQ. As of right now, the NASDAQ weekly has yet to break this RSI lows line. So until we break this line, we can assume that the market can be sideways to bullish. Pullbacks will be shallow as long as the market is holding above this line. That's one thing to consider. And this is a 2-year weekly chart for the NASDAQ. There is another line, and this line goes back to the previous resistance line. This was resistance right here. Resistance until we broke out above that line at the beginning of 2017, which is this entry. So what we do is extend that line, and you can see that the market has been bouncing on this line for nice recovery to fresh highs. Bounce on this line, the market would go to record higher highs. We bounced on this line again, and you can see that that was a low. The market went to record higher highs. So the question is, and it's a big question because it's still playing out, is are we going to find support on the line, or are we going to break below the line? And if I bring back the previous line that I drew, so the question is, are we going to bounce back above those two lines for a move to fresh highs, or are we going to break below those two lines and see a bigger move lower? Of course, as of right now, we don't know. We have to wait for that to play out week to week. Now, if you take a look at the NASDAQ daily chart, and frankly, this is, in my opinion, one of the biggest reasons why the market continues to be healthy. Now, we shall see how we close, but if we continue holding to the gains for Friday, this is a big deal, and it's a bullish argument, very strong one. Now, go back to the lows of early 2016, and this is where the RSI moves above this range. Market comes off the lows, and we go on this huge run. Now, we take that information. Anytime we bounce on this line, we should have a reliable bounce. For example, we bounced here off those lows, uniform activity below the line, back above it, off those lows. We touch that level there, off those lows, uniform activity below the line, back above it, off the lows there. We touch that level. Actually, we just kissed it, which is the lows there. And now, as long as we are positive for the day, and as long as this is holding, this is also bouncing on this line. And that's why I say it's the biggest argument that I can see as to why the market can and might bounce. The more we start moving higher after finding support here, the more it suggests that we might actually see fresh intraday highs. At the same time, let me just point here that if we break below the line, then that's going to be something different since early 2016. That would be a bearish sell signal if we break below that line and fail to recover in the short term. Right now, it looks like support. We have to assume that that is good enough to stop the recent slide. Now, also, I'm sure many are watching this recent lows. There's a trend line here on the NASDAQ daily, connecting the lows here and here, and over the last 2 days right there. So as long as that is holding, it's another reason why the market is finding support where it needs to. If we take a look at the Dow weekly, man, this thing is still holding above 69.1. In fact, we've spent most of 2017 and into late 2016 above 69.1, and the market's been holding on to gains. Pullbacks have been shallow, ultimately going to record an improvement to all-time highs. So right now we see the Dow still continuing to hold above 69.1. That's a sign of a strong market. We continue watching the Dow monthly since about late 2016. Once it moved above 69.1, you can see this is the action. This is consistent with our understanding of markets. Whenever the market is above 69.1, it generally means sideways to outright bullish. It's exactly how the market's been responding. You can see the Dow is only down 1 to 2 points for for this month. So I mean, it's unbelievable. Looks like a big drop the last couple of days, but the Dow is almost unchanged for the month. That's how powerful the market remains on the monthly. And I failed to mention the NASDAQ monthly, as you might suspect. On the NASDAQ, continues to hold above 69.1 since about January of this year. So here we can see in this phase, when you're trading above 69.1, yes, you're going to get pullbacks, but they're going to be shallow. it will be similar to this period here that I always point out because it's conveniently on the charts. We can study this. Here we can see that from 2013 around here to here, almost 2 years, the NASDAQ held above 69.1. You can see, yes, we got pullbacks, but those pullbacks were shallow. Ultimately, we go on to record an improvement in prices. So we are in the same period. As long as the NASDAQ is above 69.1, we know the market is sideways to bullish. If we take a look at the S&P 500, and this is a multi-year going back to 2014 on a weekly time frame, just like the NASDAQ, we can see that we moved above this resistance line here at the beginning of 2017. The market hasn't looked back. Market's been using this line for support. We bounced below the line, back above it for this re-entry, and bounced on the line here again for this re-entry there, and now we are back to test that line. So unless we break below the line, we have to assume that the market could very well find support on that line on a week-to-week basis. So for now, we are back to test the line. We haven't broken below it yet. So if we bounce on this line in the new week, chances are we are recovering. If we break below that line, then that's something that has not happened in 2017. It would be a sell signal. Take a look at the S&P 500 1-year daily, and there's a line here. Now this is a 1-year view. We can see that most recent lows have come with support on this line. Uniform activity below the line, back above it for those lows. And right now, as long as this line is holding, this is where support is more than likely going to take place. So right now, S&P 500, as long as this line is holding with support right here, that's good enough to stop the recent slide. But where does this line come from? Let me show you. You have to go and take a look at the lows from 2016, the lows right here. Once the market moved above that range, on hindsight, we can see that after that movement, which is the lows here, the market has gone on an amazing run. So what the market is telling us here is that this was a critical level right here. So we take that information, which I call the uniformity line. Check the description of the video for a link that describes the uniformity method in detail. But we can see that uniform activity support on this line. Again, the key is the uniform activity for the lows there. Double bottom uniform activity here for those lows. Uniform activity support or below the line and back above it, which is support for that re-entry. We bounced on the line for those lows, bounced around the line there for those lows, and now we are back to test that line. If we can hold and bounce on this line, that's going to be a reliable re-entry back into the market. And don't forget, we continue observing that the S&P 500 continues to hold above RSI 69.1 on its monthly chart, which means that markets are sideways to bullish in this phase, as long as the S&P 500 is holding above 69.1. And luckily for us, we have a good example of this. Just like the NASDAQ, S&P 500 for the most part held above 69.1 for almost 2 years during this period, and that is consistent with this move above 69.1 here in early 2013. We stayed above 69.1 until we dropped below it, which is sometime here. That was 2 years plus where the market was, yes, you had drops. Those drops were shallow and short-lived. Market ultimately would go on to have a nice trend when the RSI was above 69.1. So because the VIX is trading in the teens, as we can see here, the VIX is trading at about 14 and change right there. We can actually, because of that high VIX, we can take a look at smaller time frames for indication of what the market wants to do next. And one thing I forgot to mention here is we can see that over the last couple of days, the market's been finding it difficult to stay above the 50 level. You can see here we got rejected, which is this highs somewhere there. Rejection here when trying to move above 50 for those highs. We went above 50, back below it with uniform action for those highs. Rejection here for those highs. Rejection here for those highs. So 5 minute to 5 minute, if the market is unable to move above 50, we are going to be stuck in this pretty much, let's call it heavy trading. In other words, stocks are going to be having more propensity to go lower. If the market can recover above that line, and more importantly actually, if the market can move above the recent highs, if it can clear that line, then we might recover and close stronger than we are trading right now. But right now we are still showing that we could also very easily continue finding resistance on this line. Now, if I take the bullish argument and the bearish argument, obviously we are trading above 69.1 on the monthlies. As long as that is the case, as long as the daily charts are showing support, we have to assume that this market is due to recover. Until we move below 69.1, until we see daily support break, this market is sideways to bullish. Eric Muathe with Muathe.com. By the way, subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we're going to take a look at some of our recent stock picks, our bearish ideas that some are already working in our favor, and also we'll take a look at commodities, take a look at sectors that I believe could be moving in the coming days and weeks. Eric Muathe with Muathe.com for everybody. Have a great week. Peace and blessings. EACS. Woo!